Greenspan Company predicts $400,000 of variable costs, $700,000 of fixed cost, and a pre-tax income of $90,000 in the next period. Management also predicts that the contribution margin per unit will be $50. Uses their information to compute the total expected dollar sales for the next period, and 2, the number of units expected to be sold next period, and then we should omit dollar signs in your response. Round the units and dollar amounts to the nearest whole numbers. So let's plug in what we have. So far, variable costs are supposed to be $400,000. Fixed costs are supposed to be $700,000. And pre-tax income is supposed to be $90,000. So we can work with what we have here and come up with a contribution margin they said was going to be $50 per unit. And the fixed cost plus the income before taxes, kind of working backwards here. If you add these two together, you should come up with the contribution margin in total, which we will. And that'll be 700 plus 90, which is going to be $790,000. And then if we know the contribution margin per unit and we know the total contribution margin, we can divide that per unit amount into the total to get how many units that we have sold at this point under this scenario, which is 15,800 units, and that's our first answer, 15,800 units. And the last thing we're looking for here would be the total expected dollar sales. Well, the dollar sales, if we know contribution margin and we know variable cost, these two together should add up to the total sales. So contribution margin is $790 plus variable cost of $400,000 gives us sales of $1,190,000. And that's our second answer.